Good morning, guys. Keith at Crypto Bullseye. We've got an important one today because this is an update on Cardano, and we're going to talk about Cardano's bull market high in 2025. Because Cardano's put in a bull market high, guys, all the way up here. We talked about it, $1.32. So $1.32 was a key psychological level. That was the 38.2% retracement from its 2021 high. So that's Cardano's bull market high. It's over for Cardano. Come on, guys, get real. As far as transactional value is concerned, a 38.2% retracement from its bull market high. Cardano pretty had nothing developing on there in 2021, guys. We're all the way down here. We're currently trading at 61 cents. So 61 cents, guys. We were at $1.32. $1.32 was the rejection point. That was the 38.2% retracement. Once we break that, guys, it is not the bull market high. Once we break that, we've got some easier levels to overcome. The road to $2, once we break $1.32, is going to get even easier. And then we can start projecting for all-time highs of price discovery on Cardano. And we're going to go back to basics on this one, guys, because the road to $1.32 that we need to actually overcome is going to be quite a difficult road. We need sentiment on our side. We need positive market sentiment driven by positive news, driven by stimulus, and driven by potentially rate cuts, guys. So when we get the rate cut, that's when you start really seeing the flow of money. That's why you start seeing the M2 money supply has already started pushing up, and the economies outside of the US are already printing and printing and printing. The flow of money is going into the world economy. It's just the Fed's a little bit late to the game. So that's what we're waiting for, guys, is we're waiting for the Fed rate decision. We're waiting for a big rate cut. If we can get anywhere near 1% or 0.75, guys, that would create such a stimulus going into the economy. Why do you think that is, guys? Imagine that you're a rich person. Imagine that you're an asset holder, and imagine that the markets are fearful. So you want to put your assets into something that's less risk. The dollar's got an interest rate of 5.5%, guys. You could stick it in bonds. We'll stick it in whatever, guys. You could stick it in a dollar-backed asset. So you get your 4.5, you're getting your 5%. Now, Mr. Powell says, right, we're bringing the interest rate down. We're going to bring it down by 1%. Now, the people that are fearful of the market, that hold in their assets in a less risky place, i.e. the dollar-based assets, then can say, right, okay, we're not allocating as much interest. We're not earning enough interest on this asset. We can start putting that into more on-risk assets. So we can start taking the liquidity out of off-risk and start putting that liquidity into on-risk. Why are they doing that, guys? Because they're getting less interest. Why are they doing that, guys? Because the economy, the market, the flow of money is going into the markets. That's where they're going to get the bigger returns. So that's why they're the smart money, guys. They're the ones that drive the market. They're the ones that are the asset holders. And that's why we're just dumb money, guys. We're trying to jump on the back of the scraps, and we're trying to run with the flow of money. So the money is in the dollar at the moment, guys. Times of fear. We're going to wait for the next few days to find out what happens on FOMC, what happens on the back of the geopolitical tensions, guys. So first things first, we're trading at 61 cents. I digress then. Sorry about that rant, guys. 61 cents on Cardano. We know $1.32 is the key level that we need to break. However, we've got a couple of levels here. So we've got the inversion fair value gap. Now, remember, we talked about this in the last video. When you're above it, it holds support. When you're below it, it's resistance. When you're above it, it is green. When you're below it, it is red. But just from a psychological perspective, guys, look. Simple, simple, simple trend line. Rejection, 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 support, 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 rejection. So we know that this area, 71 cents, is going to be a big area to overcome in the short term. What's the next key area, guys? 200 daily moving average, 80 cents. 80 cents is a round number, key psychological level. Expect sell orders here. Now, the bulls and the bears, guys. Remember the bulls and the bears, the buyers and the sellers. Now, what's happening here, guys? You've got a support buy here. So if a bull bought here and he expected resistance at that 200 moving average, what would the bull do? Buy, 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 buy. When he hit that, if he expected a reaction, what would he do? Sell. So the bull would sell, guys. What else is happening here at the 200 moving average? The bear. What's the bear doing? The bear is selling. So the bulls are selling and the bears are selling. That means the bulls are becoming the bears in the short term, waiting for a pullback to try and get better entry. So they're waiting for something to come back like this. This was previous resistance. We're waiting to crack through and for that to act as support, guys. And when that happens, this is the important thing. When that happens, you've got a break to the upside. That's this here. You've got a rejection. That's where the bulls become the bears. You've got the pullback. This is the key significant thing here, guys. And this is why the stochastic is so powerful. All the way back down to oversold. What does that do? This is giving the bulls momentum. This is giving the bulls a coiled spring. So they've got enough power to push back up with velocity. And if that holds, guys, when this is oversold and this holds as a higher low, that's showing in the short term, the Cardano bulls have got control, and the Cardano bulls have got a higher probability of making that move and taking out the 200 moving average. So once we've taken out the 200 moving average, then it's the big test then, guys. Then it's the 38.2% retracement, the one that we've already rejected from, the one that I said that we were going to reject from. And that obviously is, of course, $1.32. So you got $1.32, guys. Once you break $1.32, what was the next key level? I said $2. Why was that? Because look at the bear market here, guys. After 2021, you got this big surge in price action. That big surge in price action went all the way from $2. Never guess where? $1.32. So once we break $1.32, we've got little resistance all the way to $2. So the road to $2 once you break $1.32 is going to be easier. And one thing that you're going to see, guys, if we just pull up, I haven't checked this yet, but let's just pull up a fixed range volume indicator from the previous bull market high all the way to where price action is now. And you can see, look, there's the volume, there's the volume, there's the volume. We're holding that as support. What's this, guys? Less, less, less. So that's less sell orders as you start pushing up towards all-time highs. And when you're in price discovery, things get a lot easier, guys, because people don't know where resistance level is, because people haven't had a price that's stuck there before. Why? Because that's price discovery. It's never been there before. So we've got a little bit to go on Cardano, guys. $1.32. That is the midterm level that we need to overcome before we can really start this bull market and alt season driving. But in the short term, guys, in the short term, we need to take out the 200 and we need to take out this level here, sat at 71, 72 cents. Right, let me know in the comments if you did enjoy this video, if you did learn something. You can join us in the Discord, guys. How much is it? Completely free. So get yourself in the Discord, guys. It's got loads of alpha in there, lots of people, lots of friends that you can meet. Absolutely, like I say, completely free. You can follow me on X as well, Bullseye for Crypto, and I will see you in the next one.